Hello, hello. Is anybody on there? Hardik, can you see us on Facebook or on YouTube?
I can see on our YouTube.
Cool. YouTube, hello. Say hello to Pomp.
Hey guys, how are you?
And how about in the Facebook group? Hello. Just give us 1 minute,
We are
friends.
live on.
We're live
Yeah, we are live.
everywhere?
Yep.
Cool. Awesome. All right. Well, it gives me great pleasure to introduce my friend, Anthony Pomp, who has been seen on CNBC pretty much nonstop with the rise of Bitcoin and then also the subsequent sell-off. And it's really cool that you're here. We have a lot of different people who've been asking, what does this have to do with short-term rentals and with real estate? And that's a great question. The answer that I always like to give is, I view myself as a professional investor and an asset manager, and short-term rentals and real estate are one component of my investment strategy, but they're not the entirety. So I always look at everything, including stocks. I don't really look at bonds anymore. I never really have. And I don't think people should, but nonetheless, that's an option. But what I have been spending an incredible amount of time, and I think the future is really bright from a risk-adjusted return perspective, is crypto and Bitcoin in particular. So I know you're all things Bitcoin, Pomp Investments. Go ahead and introduce yourself and tell us a little bit about your background, and then we'll get into some questions.
Yeah, pretty simple. Was in the military for a while, built and sold 2 software companies, then ran a couple of teams at Facebook and Snapchat, and then started investing in 2016. I got a portfolio about $500, $600 million in the crypto space. And then a couple of investments outside of the crypto space, everything from small software companies all the way to kind of late stage type investments in Lyft, Airbnb, Reddit, et cetera. And so, just trying to figure it out alongside everybody else, but so far so good.
Okay, cool. And how long have you been following Bitcoin in particular, and when do you think you made your first investment?
First investment was definitely 2016. I bought some mining equipment and actually didn't start mining Bitcoin. I started mining Ether from Ethereum network first. But first time I heard about it, I was actually relatively late to most people. I heard about it in 2014, and I did absolutely nothing. I asked somebody I worked with about it. They said it was stupid, and so I just moved on, didn't even Google it. And then in 2016, started with mining. And frankly, it took till kind of beginning of 17 is when I really said, wait a second, like I'm, undervalued or underestimated what's going on here. This is when Ether's price had gone from $10 to 30 to 100 from like, I don't know, January or February up to May. So in a very short period of time, kind of a 10X in value, and just it's in human nature, right? You see prices go up and you look and say, what is going on here? And so as I started to kind of go deeper and deeper down the rabbit hole, all of a sudden, I began to realize that there was a lot more innovation than I had originally thought, and the disruption and asymmetry for an investor was going to be incredible. And so decided to pretty much spend all my time here, and haven't really looked back since.
That's awesome. And I think that's kind of the point, right? I got introduced to Bitcoin in about 2017. I invested shortly thereafter, I think at about 3,000 a coin. I posted in the Short-Term Rental University that this is something that's interesting and people should maybe take a look at it. And I sprinkled it throughout there periodically. I too also did a bunch of mining. I was mining Zcash using, NVIDIA cards, and I had this whole setup. And I don't know that I made a lot of money on that, but I do know that I learned an awful lot. And that's the thing about investing and risk strategies. What seems risky at first, the more you understand it, eventually you get a deeper understanding and it becomes more natural and comfortable. And it's gotten to the point where I know I saw a tweet of yours and I had actually posted in my Short-Term Rental University. I've taken some of my treasury in my international boutique hotels and I bought Bitcoin with it. And I posted that and everyone thought I was crazy. But from where I sit, I think holding dollars is more risky and crazier than Bitcoin. And for many people that are watching this, I'm sure they're just like, no, that's crazy. It doesn't make any sense. But you go from learning a little bit, mining a little bit, spending all of your time there, learning more, and all of a sudden, like there's a flippening, right? And the reality just looks totally different. So walk us through that process and where you think we are in Bitcoin today and where you think we're going.
Yeah, I mean, look, I think Bitcoin basically has transitioned from kind of this contrarian idea to it's definitely a consensus idea now, especially on Wall Street with large financial institutions. It's starting, earlier this year. It was still a pretty contrarian idea around corporate treasuries. I think you're going to continue to see more and more of them adopt it. And so for most people who know nothing about it, it's just, look, smart money, right, is starting to adopt it. They're starting to put it on their balance sheets. They're starting to put it in their portfolios. And so whenever that happens, regardless of what you think about it, just go learn about it, right? Is kind of where I start with. And when you start that education process, I think most people realize with anything, whether it's literally collectibles, digital art, Bitcoin, real estate, whatever, you just had preconceived notions and kind of believed in these myths only because that's what the uneducated share about it, right? So, I could probably ask a real estate investor, hey, what are the 10 things people believe about real estate that's wrong? Right. And they'll literally just rattle them off and they know them, dead in the kind of straits. Right. And so for me, somebody asked me that about Bitcoin. I can rattle them all off. Right. It's slow. It's expensive. The energy consumption is really bad. The government's going to shut it down. It's always hacked. Like, all
illicit,
these things.
right?
Yeah, it's illicit, like all of it. And so I think that it just ultimately what you got to do is you got to get educated. And then when you get educated, what you realize is there's essentially a computer system, right? A network. It's technology. There's a computer network that has been created that nobody owns, meaning that it is governed by the people or kind of the masses. And that computer system is the strongest computer system in the world. And so what I always ask people first is, if I told you that you could find the strongest computing power or the strongest computer network in the world, do you think that would be valuable? A lot of people are like, yeah, that's probably pretty valuable. Right. I don't know what we're going to do with it, but like, yeah, that's probably got some value.
Right. I'd like to own a little bit of that.
Yeah. And so it's like, okay, like that's going to be valuable. And then it's, okay, what are we going to use it for? And so when you think about all the different things that you could use it for, ultimately what you realize as you get kind of more educated about it is there's three things that are really important, right? One is having some level of deep security. Right? Whatever we're going to do with this, if we have a lot of computing power on it, we can make it very secure. So whatever we do, no one can take from us, no one can kind of hack or et cetera. The second thing is, what is the most valuable thing in the world, right? Well, the most valuable thing in the world is actually money itself, right? People want money. And so normally what they do is they exchange goods and services for money. But at the end of the day, the money is what's valuable. And then the third thing I think is in this internet age, it's the ability to communicate. And communicate can be words, can be video, can be text, can be value, can be whatever, with other people around the world, right? And so when you really kind of take a step back and you just look at it and you say, okay, so if I had a computer network that was the strongest in the world, that allowed me to have deep security with whatever I was doing, that could serve as a way to transfer value or money, and also allowed me to connect with anyone in the world that had an internet connection, it's probably pretty valuable, right? And so like, if you start from there as a premise, what you realize is that's exactly what Bitcoin is. It is simply an open, decentralized network of people that have come together on the internet, and they've decided they're going to send value back and forth. And they do it for all kinds of different reasons. Everything from some people buy Bitcoin because they want to store their wealth. They don't want to have it inflated away by kind of all the craziness in the macro economy. Some people are buying Bitcoin and then sending it to other people, just like they would use Venmo, PayPal, or Apple Pay. And then other people are speculating. They're buying something because they think it's going to go up in value. What I say is, guess what? That's what everyone does with stocks. That's what people do with bonds. That's what they do with real estate. That's what they do with collectible cars, and all the way down the line, right? Like that's human nature. People want to get rich, right? And so that capitalistic kind of gene kicks in. And so when you think about Bitcoin today, that's what it serves as. It serves as a store of value for some people. For other people, it serves as a store of value and a medium of exchange. And for other people, it just serves as a speculation tool. But all of those use cases are valuable to somebody. And so Bitcoin has now grown from literally a penny to today it is worth about $50,000 per Bitcoin. And the beauty of it is, as more and more people find it to be valuable for whatever the use case is, regardless of what they use it for, it's a fixed supply asset. And so if you walked into a neighborhood and there was only 10 homes in the neighborhood and you said, I don't know why people are going to want to move here, but if more people keep moving here, the houses are going to go up in value.
Right.
Of course. Right. And so that's basically what's happening with Bitcoin is people from all over the world are learning about this thing, and they're coming and they're showing up and they're saying, I think it's valuable because X. And X is literally different for millions and millions of people around the world. But when they say, I think that this is valuable for X, they end up wanting to get exposure to it financially. And so when they go to buy it, the price goes up because of fixed supply asset. And so I think it's just a self-reinforcing thing that that people are, kind of waking up to on a daily basis. And that's ultimately good for Bitcoin.
So a few things. One, the comment about a network. We all know that the network effect, the value of the network is worth more as more and more people join. For those of you who don't know, I used to run an institutional hedge fund running $4.5 billion. And what we would always try to do is find the next emerging asset, because while it seems riskier at first, the reality of it is if you're right and there's more institutional capital piling in, that's what drives up the value, right? So the fact that retail in Bitcoin was getting in before institutions is really good for all of us who've had a play, because they have boards of directors and generally they tend to be older and have more regulation and they're more dubious, and it didn't exist when they were young. Like for my kids, Bitcoin is going to be just normal, just like Airbnb is and just like Uber is. And I recall at the advent of Uber, I was like, there's no way I'm letting my wife or my kids ride in some guy's Toyota Camry. Now I can't imagine the world without it, right? Like we rely on it. It's changed economics for buying cars and driving. So the first
thing, violated everything. All those technologies violated everything your parents told you. Don't stay in somebody's house. Don't get in a stranger's car, right? With all the financial services. Don't send money to people on the internet, right? Like all this stuff. And so it's just ultimately times change.
Times change. And I think that the opportunity here is for us to get educated and keep an open mind, right? And so the third or the last use case that you discussed, I think is the hardest one for people to get accustomed to, which is it's a speculative instrument. I think it's going to keep going up. Some people call it a Ponzi scheme. It's the exact opposite of a Ponzi scheme if you know what a Ponzi scheme is. But the point is, let's not talk about the speculative or the price going up. The way that I actually learned about Bitcoin was in 2017. I was in Bali, and there was ATMs for Bitcoin. And what I found were shop owners, people that were transacting, restaurateurs and people that were selling goods, were so worried about inflation in Indonesia that they had less comfort holding the rupiah, their local currency, than this weird new emerging, digital currency. And so they were converting rupiah to Bitcoin. And that was like their store of value, and that was their digital bank. And so I was like, oh, okay, so this isn't just some digital thing that I don't really understand, right? This isn't GameStop. This has like real functionality, and there's all sorts of countries and economies that are reliant on this because they can't trust their government, right? And so the network effect is worth more as more people in different countries use it for a variety of different reasons. More people turn to it as digital gold. More people fear the inflation, which is forthcoming. Every stimulus bill that comes down the road here, and they just don't stop. They can't stop, to be perfectly honest, just debases the value of the currency more and more. And, one of the reasons that I'm bringing everybody at Short-Term University along for this ride is because I can't stand to see people stand by and have like their hard work, their hard labor, their years of savings. Maybe they're approaching retirement age, which is like one of the biggest age categories for Airbnb. Just, continue having to work or watch their nest egg deteriorate. So I would love just some comments on where you think this may go and how early stage this is. To help people understand, because that's the other thing, right? Everybody has this, oh, I wish I'd gotten in at, 40,000, 30,000, 20,000, 1,000, and it's overpriced now. Is it overpriced?
It all depends, right? And here's part of what I always talk about is when you think about the value of something, the value is what the thing is, right? And the market ultimately over a long enough period of time will determine the value. What we see on a day-to-day price or a day-to-day basis is price though. And so the price fluctuates wildly in Bitcoin, up 10%, down 10%, up 50%. Last year went down 50% a single day. That sounds insane to most people, right? It literally sounds like gambling. But what you realize is the market's trying to figure out, what is this thing worth? What is the value of this thing? And year in and year out, what they've determined over a decade now is it's worth more than we thought it was worth before, right? And it keeps going up in value. And so the market has not yet determined exactly what it is worth, right, from a value standpoint, because it is not stable yet, but it is still trying to do that price discovery. And so what you end up seeing is let's compare it to something like gold. So just the store of value, right? I talked about three use cases: store of value, medium of exchange, and then also kind of speculation. So if we just look at store of value, the best store of value in the world over a long period of time has been gold. Gold has served as money for thousands and thousands of years. It continues to serve as a great store of value. The problem with gold is that it is an inferior technology in the digital world. I can't take my gold bars and put it into my computer. The technology is not compatible. It's really heavy to carry around. It's hard to cut, scrape it, and kind of divisibility and portability, all these things. Bitcoin is superior in every way. So it is digital, it is portable, it is divisible, it is auditable, it is finite and scarce and provable, and all these things. When you compare those two things, it is not hard to paint a picture where Bitcoin is a 10x improvement on a technology standpoint, maybe even 100x different or better, right? And so when you look at that, gold's market cap is about $10 trillion, right? Pretty big market given kind of where Bitcoin is today at around 1 trillion. But I believe that Bitcoin is going to end up being worth, from a market cap standpoint, multiples of gold. Maybe it's 2x, maybe it's 5x, maybe it's 10x. I don't know, right? I literally don't know. But what I do know is that it's not going to be worth less than gold's market cap. It is a superior technology. And so when you look at that, you say, okay, well, just from here to gold's market cap is 10x. What's the timeline?
So we're at 1 trillion now. Gold is 10 trillion. So it's 10x.
Exactly. What's the timeline? I don't know, right? I always say the predictions need two things. They need an outcome and they need a timeline. The timeline's the hard part. Is that going to happen next year? Is that going to happen in 20 years? I have no clue, right? I've got an opinion, but I actually don't know, neither does anybody else. And so I think you just got to understand in terms of when you look at something like Bitcoin that is so asymmetric, right? It's either a 1x downside, you could lose all your money, or it is hundreds, if not thousands of % of upside over a really long timeline. When you buy something, what you should do is you should literally put it away, forget about it, and don't come back for a long time, right? And so it's kind of classic investing principles.
Right.
It's literally just buy things that you want to own for a long time, put them away, forget about them, and come back years later. And my guess is that if you do that with real estate, if you do that with Bitcoin, if you do that with any good asset, you're going to be really, really happy over a long period of time. And so I think that understanding Bitcoin is just another asset to do it with. You don't have to be kind of a Luddite. You don't have to believe it's going to be the next global reserve currency. You don't have to believe that the dollar is going to fail. It's simply a store of value at its most minimal kind of value proposition. There are people who believe it is more than that, right? There are people who believe it's a medium of exchange. There are people who believe that it's a great speculation tool. There are people that believe it will ascend to the global reserve status, all this stuff. But you don't have to believe any of that just to understand at the core kind of basic level, this is a store of value. If I hold dollars in my bank account for 5 years, they will be worth way less than they are today, right?
With certainty.
With certainty,
there's no doubt, right? That's not like a speculative thing. This is my opinion. We know the Federal Reserve has told us specifically that that's true.
Yes, they are going to, it's like a melting ice cube. They're going to melt the ice that you hold in the bank, right? So you're financially incentivized to get out of the dollar. And so that's like pretty non-controversial in terms of what should you do? You should get out of the dollar, right? You should have a little bit of a rainy day fund so you can live for 3 to 6 months or whatever your preferred timeline is. And then you should go get out of the dollar. When you get out of the dollar, the big question is, where do you go?
Right.
Right. And there's where I think people have all sorts of opinions. Some people say, oh, go all into the stock market. Other people say, go buy all real estate. People say, go buy all precious metals, go buy Bitcoin, all this stuff. The truth is that the truth is probably somewhere in between, right? And so what you probably should do is you should build a diversified portfolio that ends up having a lot of non-correlation in it. And part of that portfolio should be Bitcoin. That doesn't have to be 50% or 80% or 100% of Bitcoin, right? It could literally just be 1, 2, 3, 4, 5%, right? It could be a small portion of your investment portfolio, but having 0% is probably the wrong answer, right? And so I always go back. This data is a little bit old. I think it's like a year old, but at the time when I looked at it, over the prior 5 years, if you had taken your portfolio and you had just simply built a simple 60-40 global portfolio, you would have returned 7.2% annualized return. Pretty good, right? Pretty average, if you will. Well, if you had put in 0.5% from your stock portfolio and 0.5% from bonds, so a full 1% of your portfolio into Bitcoin, What would have happened over that 5-year period is you would have went from a 7.2% return to a 9.2% annualized return. So 200 basis point increase in performance with a 1% allocation. If during that same 5-year period, Bitcoin had literally gone to zero, you lost all of your money, you lost that 1%, your annualized return would have went from 7.2% to 7%. So a 20 basis point downside. So with the benefit of hindsight, in that 5-year period, there was a 200% increase or a 20 basis point downside, right? Or I'm sorry, a 200 basis point upside or 20 basis point downside. So 10 to 1 in terms of the asymmetry. Now, that doesn't mean that it's always going to be 10 to 1. Maybe sometimes it's 20 to 1, sometimes it's 3 to 1, whatever ends up being, right? But the key is that Bitcoin serves as a non-correlated asymmetric asset, meaning if it works, it's going to go up a ton in US dollar value, right? And if it doesn't work, it can only go down 1x. So when you have asymmetry and the non-correlation, meaning that it doesn't necessarily move with stocks, bonds, or other types of traditional assets, then what you want is you want to put that into your portfolio, because if you're a believer in kind of modern portfolio theory, what happens is you're actually de-risking your portfolio, right? By adding a bunch of non-correlated assets, you actually make it a more resilient portfolio. So if you can actually de-risk and get exposure to an asymmetric asset, that is like the holy grail. And I think that's what Bitcoin has served now for 12 years or so for Bitcoin investors. It's literally the best performing asset over the last 12 years. And I think that's only going to continue. You know, last year in the pandemic, it was up 300%. I think in the last 12 months, up 300%, give or take, 315%, something like that. Gold's up like 9 or 10%. And I think the stock market's up like 15%. So you're talking about like, it's not even close. I mean, these things are in completely different realms from a financial perspective. And so if you had taken $1 12 months ago and you'd put it into those three assets each, you would literally have $4 in Bitcoin. You would have $1.09 in gold, and you have $1.15 in the stock market. It's crazy when you start to think about it.
And a couple of things. I read somewhere, so I don't know who to attribute it to, but I thought it was really eye-opening that as humans, once something has existed for 20 years, it's like a given, right? So like the internet, right? We never question about the internet. It's like a utility or running water. We're 12 years into it. So Bitcoin is pretty much here to stay. It's not going anywhere. And once you recognize that, using your binary cases, it's not really going to zero anymore either, right? So you take that tail out, and the asymmetry is even greater than what we just explained. The other thing I would say is we're now starting to see institutions like JP Morgan and Citibank and all these other BlackRock professional money managers that are saying the exact same thing that I've been saying to the STRU Facebook group. And we get all sorts of people that are into it and love it and like it. And by the way, if you guys are on Facebook, go ahead and start to like all this, please, or heart it or whatever you do over there. But we also have a lot of naysayers who say, oh, it's a scam and I don't like this and so on and so forth. But once you start to see these institutions not only start to allocate on their treasury, whether they're corporations, pensions, endowments, insurance companies, the most staid conservative insurance companies are putting it on their balance sheet. And you start to see them suggesting for their client portfolios an allocation, whether it be 1%, 2%, 3%, like you can take that binary, it going to zero away. It's not going to zero, and it's been here for 12 years. In 8 more years, it's going to be like oxygen and electricity, and it's just a fact.
I think people really, really underestimate what you just said. There is this Lindy effect that occurs. The longer something is around, the more likely it is to survive. And on top of that, one of my favorite things is things in motion tend to stay in motion, barring some catastrophic external event. And I think that what we're really watching across financial markets today is there's a lot of folks who are incredibly intelligent and they're bored. The simplest investment strategy is almost too simple.
Right.
The best investment strategy over the last decade was simply to buy Bitcoin and hold it.
Right.
You did not have to be a genius, right? The next best investment strategy would have been something like buy the NASDAQ 100 and hold it.
Right.
Right. Like this stuff was just get long and sit on your hands and don't do anything. And so I think that what we're starting to see here is we're constantly watching the highly intellectual folks look around and say, it can't be that simple. It can't be that simple. What am I missing? What am I missing? And so if you look at something like Tesla, right? I mean, Tesla's a great example. You had all these people who were looking at it and yelling and screaming about how it was going to zero. It was a fraud. It was this, it was that, all this stuff.
Comparing it to GM, the valuations, right? Like looking at it historically like any other security.
Tesla has completely blown all of them out of the water, all of them. And so I think that's where you really start to understand the power of this stuff, right? Is that we are watching a complete kind of imagination of valuations and companies, not from a let's all go be super irrational and pay anything. It's that the companies of yesterday had to have really high capital intensive kind of cost structures. They were super capital intensive. They really had to do geographic expansion on a city by city, state by state, country by country, continent by continent type expansion, right? Literally they would go into a room and they would say, 2021 is the year for international expansion.
Right.
We're going to go to Mexico first, right? Today, companies are literally created by kids, and I use kids as any young person. They have a laptop and they connect to the internet and bam, they're global on day one. They spin up a website, sometimes in a single day, and they hook into Stripe and they hook into Plaid. And next thing you know, they're making money. And it cost $0. It literally took somebody 6, 8, 10 hours of their time, and they are in business. And so in a world where Substack can compete with the New York Times, people don't realize you can't use the old school valuation models to apply it to a fundamental paradigm shift that has occurred in terms of the way companies are built. And so I think that's where people get a little lost, right? This whole idea of value investing is not dead. You should absolutely buy things that are cheaper than what their actually value is, right? Like if you can find something that is priced lower than what it's worth, you should buy it. That is value investing. What value investing is not is some virtue signaling type activity where you get to say that valuation appears high based on our prior valuation model, in which we used to look at a car where if you wanted an update on the car, we had to either mail you a CD-ROM for you to update the software, or you had to buy another car.
Right.
Like, that is insane, right? And so instead what happens now is that literally over the air, taking Tesla as the example, over the air, the entire instrument panel can be updated immediately. That is wild to people.
It's mind-boggling, right?
Right. And so you just got to change the way you think about the world. And I forget the guy's name. My wife wrote about him recently. I think his name is Areen. And what he basically did was he gave up on value investing, right? He said, everything that I know about the world is not working. And he'd been, horrible returns. People were redeeming all this stuff. And he said, I'm going to take all the things I know. I'm going to put it in this box and I'm going to throw the box out. And you know what I'm going to do? I'm going to go find the technology investors and say, how do you do it?
Right.
And he went and he learned and got this crash course. And he said, okay, I'm going to draw a box and put all my new information in the box. And when he did it, guess what? He's absolutely crushed it over the last couple of years. And the reason is because you're trying to use old school evaluation of businesses on new technology enabled businesses, and it doesn't work, right? You can't do it. And so what is going to end up happening is having cash flow and profitability is still important regardless. You got a capital intensive business or you got a software enabled business.
Sure.
You got to have profits, right? You got to have good governance. You can't take on tons and tons of dilution, right? You can't go do crazy shit. You can't trade at 1,000 times multiple on your revenue, right? Like there's some core timeless investing principles that will always apply. But what you do have to do is you got to update things like, well, what happens if all of a sudden Uber is a taxi company with no inventory and instead is a marketplace rather than a simple B2C type business?
Or Airbnb, the largest hospitality company on the planet that owns no assets, they can scale and grow so quickly because they're not, I read Exponential Organizations by Singularity University. So if anybody has not read that, that's a great book, Singularity University, Exponential Organizations. And in this new paradigm, and I read this, maybe 4 years ago or so, actually having physical assets, what used to be considered a positive and therefore labeled an asset, is turned around entirely, and it's actually a negative, and therefore it's a liability. It makes you slow moving. It makes you capital intensive in order to go and like scale and grow and expand to Mexico using Pomp's example. Like, it requires a lot of time and energy and so on. But when you have no assets or you're asset light, that's the advent of Airbnb, and that's the realm that we all play in. So it is a very different paradigm. And what's actually happening, you talked about that investor that was, not performing very well, and he flipped his whole thinking around. What's happening right now, and we're seeing it just going back to the store of value, we're seeing for the first time an inversion of gold, right? Like, gold is going down as corporations and institutions and so on, banks are selling gold and buying Bitcoin. And in that regard, it's really early days, right? Like, there's still Fort Knox with tons and tons of gold. Think of the cost to store that, protect that, right? I mean, there's just, people talk about energy consumption and costs in Bitcoin, but what do you think it costs to like store just huge warehouses with security cameras, guards, and everything else? Forget about moving it, right? Like, if you wanted to liquidate. So I think personally, we're in the very early days of this investment strategy. I know that you gave a prediction of about maybe 10x just flipping gold, and then many more alternate uses and a lot more upside. Like, just the network effect could be significant.
You want to know what I think?
Tell us.
2024. By the end of 2026 or the beginning of 2027, we'll see $1 million Bitcoin price.
You guys heard it here first, right here on STRU. Yeah, look, you know what? I'd like to tell people the following. I'd like to serve as an example. Don't necessarily follow me, but just see the extreme far post so that you are more comfortable inside that, like, you're in the box. I'm outside the box, you're in the box. But you and I spoke. Tell people your retirement. What is it invested in?
Forget my retirement, every single dollar to my name, basically. So my retirement fund, I've got, I don't know, 2, 3, whatever they are 100% invested in Bitcoin. I'm a young guy. I got 30 years.
My retirement, I'm not quite as young, but I have 30 years too. I have 100% of my retirement in Bitcoin and in real estate.
That's it.
Actually, that's not true. I've got some shares of Tesla, but other than that, that's basically it. And then from dollars, I made a decision middle of last year-ish that I didn't want to hold the dollar anymore. And I literally said, I'm more comfortable with the volatility of Bitcoin being my reserve asset than I am holding the dollars. And Michael Saylor, that we both follow, has said, beautifully and eloquently, I would rather have the volatility of Bitcoin and have the possibility of the upside that I think is real than the stability and the certainty of the debasing and the devaluation of the dollar, right? So, like, which would you prefer? You want with certainty that you're going to lose, or do you want the possibility that you're going to gain big?
Yeah, and I think part of it also is just, again, people are so short-sighted, right? Like, people will go do all this work and they'll literally come to me and they'll be like, oh, you know what? I think I should buy Bitcoin. I'm like, fantastic. How are you going to do it? And they're like, I'm going to wait for it to drop a little bit. I think there's going to be a pullback and then I'm going to buy some. And I'm like, wait a minute, hold on. Are you day trading? And right. Like, no, I'm going to hold it for like even 2 years, 3 years, 5 years, whatever it is, right? And I'm like, okay, what is the difference if you buy it at $48,000 or $49,000 if you're gonna hold it for 5 years? Right. It was $1,000. I said, well, what do you think is gonna happen in 5 years? It's gonna go up a lot. I said, okay, so what's the difference between those two things? Nothing, right?
And what I like to say, excuse me, people are posting in our Ready Wealth Management Facebook group. So if those of you that are watching on YouTube don't know, I launched a new free Facebook group called Ready Wealth Management. It's really just to get us ready and prepared, and it's free. So come join us over there. But people are always saying, when we were trading at 50 and 55 and 58, it's overpriced and I'm going to sell and then I'm going to buy the dip. And I was like, okay, well, a couple things. If you are like most people, you're probably holding this in some sort of taxable investment. So if you are in a short-term gain, which most people are that are late to the party, they've held it for less than a year. So they're looking at this gain, you've got 30, 35, 40% taxable income. Plus then you've got city or state or whatever. So depending on where you are, if you're in California or New York, you're looking at 50, 60%. So you're calling that Bitcoin is going to drop by more than 50 or 60%, which is possible. But that's your call. And then the second thing is, when this thing is violently selling off, and it is in fact 50, 60, 70, 80% down, you have to have the conviction and the wherewithal to actually buy, which few people do, right? Like that catching the knife, that's when people are like, oh, I knew it was risky and this is terrible and it's a fraud and it's going to zero. Very few people buy that low because it's that uncomfortable. And then you have to actually hold it. So like you, I've recommended that you just dollar cost average and get in and have a smaller percentage of your net worth in. Maybe it's 1, 3, 5, whatever you're comfortable with. It doesn't have to be like you with, approaching 100, or me approaching, I don't know what it is now, 50, 60%. But just hodl, right? Like just sit on your hands. And the way that I suggested today in that Facebook group, people were like, well, I don't know what to do. I was like, well, either you size it so that you're not uncomfortable, or you don't look, right? So COVID's been in the news and it's been a year now. There was a point where I was just like, you know what? I can't watch this. It's not healthy for my mental outlook. I'm not trying to, ignore it. It's a real thing, but like, I don't need to consume it 24/7. I can, check in occasionally and be socially distant and responsible and intelligent about it, but I don't need to live and breathe it. So if this is really something that you're interested in getting started in, I always encourage you to get started. Start small, put it away. Don't even look at it. If you get anxious and you want to start to sell it because it's gone up so much, or you want to sell it because it's gone down so much, then just don't look at it.
That's the easiest way to do it.
Right? Like just hold it.
I mean, look, I keep going back to, there's a couple of core principles that I believe, right? The first is that digital assets are going to be more valuable than electronic QSIP assets. So digital stocks, digital bonds, digital currencies, digital commodities, right? Today, we have
digital
electronic
art.
QSIP stocks, electronic QSIP bonds, electronic QSIP currencies, and electronic QSIP commodities. When you buy a stock, you're not buying a physical stock certificate, you're buying an electronic QSIP in a centralized database. The digital version will be more valuable because it will be more accessible, it'll be more liquid, it'll be more global, it'll be 24/7, all this stuff, right? So digital assets are going to be more valuable than electronic QSIP assets.
And we've seen that, by the way, in everything, right? There's there's nothing that's analog that is worth more than digital, except for like maybe a Picasso or something.
And even that, the digital art is going to be bigger,
right?
But then the second thing is that decentralized products are going to be bigger than their centralized counterparts, right? And so that's a foreign concept to most people, but that's coming. The third thing is that the world is going to run on open, decentralized protocols. So open source software is going to be the default, and it's going to be on these decentralized protocols. Guess what? The world runs on the internet today, and the internet is an open, decentralized protocol. Right. And so that is kind of the communication open, decentralized protocol, but there's going to be many of these. And the cost structure and the upside and the kind of revenue models are all going to change, but open, decentralized protocols are going to win. And then the fourth thing, and probably the most important thing, is that this stuff's going to take a really, really long time. And it goes back to the Bill Gates quote, right? We overestimate what we think we can do in 1 year, but we underestimate what we can do in 10. And so if people are excited about this stuff, go learn about it. Go understand fundamentally what has happened, what the technology enables, and how they should be able to participate. And then from there, what they should do is they should have a very, very long time horizon, 10 plus years, right? And so the younger you are, the easier it is to do it. But I always go back to this concept of a time billionaire, right? Everyone talks about these dollar billionaires, which basically means they have $1 billion US. Great. That means you're rich. But if you think that dollars are more important than time, the classic example is, would you trade lives with Warren Buffett? You get all his wealth, but you have to be 93 years old and likely, towards the end of your life.
Right.
Most people probably say, I'm good.
Right.
Right. And it's like, the money's great, but if you can't enjoy it, like, who cares? And so I think that means that you're more wealthy than Warren Buffett, because time is more important than the money. Time you can't buy more of. And so I think that when you think about it that way, what you can understand is the younger you are, the more of an advantage you have over people. And so the longer term of a thinker you are, the more that you win, right? And that ultimately is, in my opinion, what sets apart the best investors is they're able to look really, really far out in the future and understand, okay, here's where I think the world is headed directionally. I'm going to get everything wrong from an execution standpoint. When it happens, how it happens, who the players are, blah, 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 whatever. But I think the world's going to be more digital in the future than more analog, right? Okay, that's probably a pretty good bet.
Right.
And then they go and they find assets today that will benefit from that transition or that trend, and they buy them and they literally put them away. They hide them from themselves so they prevent themselves from being a human and being emotional and greedy and fearful and all these things. And they sit on their hands and they wait. And they're the best, most laziest people in the world because they just wait and they wait and they wait and they wait and they come back in 20 years and they are rich beyond their wildest imagination because simply buying good assets, holding it for a long period of time and sitting on your hands is the single best investment strategy in the world.
If anyone can do it. And anyone can do it, right? You don't need to go to Wharton. You don't need to be working at Blackstone. But here's a couple things that I just want to highlight because I've said very many of these same things to my audience using different terminology. So when we worked on Wall Street at the hedge fund, we would start with a top-down macroeconomic point of view of the world. Where do we want to be positioned in what asset classes and what geographies? And that's how we started. And so that's what Pomp just basically said, right? Like take a view of the world, figure out where you think digital is more valuable than analog. And if so, like, don't worry yet about how you populate those buckets, but have a view as to where we're going, right? So that's macro top-down thinking. And then what we would do once we had our sort of targets and know where we wanted to invest, we would do a bottom-up selection of individual securities and individual managers and fund investments that we wanted to make. And we would populate our top-down thinking with that, which again is exactly what Pomp just said, right? Like I want to be all digital, so I'm going to move away from analog and I'm going to get all these assets and figure out whether you want Bitcoin or Ether or you want, NFTs and digital art or how you want to populate or express that. And you probably should have a diversified portfolio across a variety of things. And I know there's a lot of people actually on the YouTube channel and the Facebook group that do want me to ask you about alternatives, whether it's Ether and altcoins and so on. What are your thoughts on that?
Yeah, look, I think that Bitcoin is the king, right? It's the largest cap asset by far. It will remain that way for a very long time. And I think that you got to ask yourself, what are you looking to do, right? And if you're in this for a pure financial return and you want as much crazy upside as you possibly can get, well, then you push further and further out on the risk curve, right? And so if I said to you, hey, I'm going to give you $100,000, I need you to turn it into $300,000 as fast as possible, right? But guess what? I'll also let you go to zero.
Right.
Do the risky thing. What did you do? You go to the casino. Right? You run to the casino and you put it all and you get some odds, right? And you would try to turn it into $300,000. But because you could turn $100,000 into $300,000, you could also go from $100,000 to zero. And so high risk, high reward, but also high risk, complete insolvency on that investment. Right. And so I think that the further you go kind of down in the altcoin world, the more that you get into this like crazy casino type mentality. Are there things that may accrue value over time and 5 years from now are going to be worth more than they are now? Sure. But at the same time, so are a bunch of other assets as well, right? And so it's like, unless you are spending 100% of your time or near 100% of your time and you are an expert and you're going and you're doing this, if you're not going to be a stock picker, why would you ever go and be a coin picker?
Right.
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 And so like, if you're not going to take the time to go and read the S1s and do the diligence and figure out, here's the stocks I want to pick, you lost your mind if you're going to go and you're going to do this with coins because there's no information. Literally, it's a pipe dream. You're early stage startup investing. And by the way, maybe you get, fortunate and you get an asymmetric one, whatever. So again, it's kind of a Russian roulette type situation. That doesn't mean you shouldn't go learn. That doesn't mean you shouldn't look at the technology and innovation and all stuff. It's just know what game you're playing. Same thing I say to the traders, right? If you want to go trade, crypto's by far the most amazing place ever. The volatility on this thing, the 24/7, 365 market, the various marketplaces, like it's a trader's dream, right? From everything from arbitrage to just pure trading, etc. But also, if you're not a trader, don't trade.
Right.
Right? Like, would you go and day trade stocks? No, okay, then don't go day trade crypto, right? And so I think ultimately what ends up happening is if you've never done anything in this space at all, go learn about the number one largest, most valuable thing in the world that the market has determined is the most valuable, right? You learn everything you possibly can about it. Get some financial exposure. If you then want to go learn about all this other stuff, sure, go do it. But understand that the further you get away from the number one kind of market dominating, kind of highest market cap asset, the more risk you're taking. Now, some people say, I want all the risk, right? I come from the school of thought of like, let people do whatever they want with their money. Knock yourself out, right? You want to go put it all on black, knock yourself out. You want to go buy shit coins, like knock yourself out. By the way, you think that you found something that is small cap in crypto and it's not a shit coin, it actually ends up being a super valuable thing that no one's found yet? Sure, knock yourself out. But understand that you're going to have to pay for the reward or the punishment of doing that. And so maybe it's a reward, maybe it's a punishment, but make sure that you do your research and that you end up doing it. And so the last thing I'll say is what a lot of people also do is that they will price assets in crypto in dollars. One of the most valuable things you can do is price it in Bitcoin.
Right.
And what you'll find is unless you were really, really early, right, in Ethereum or Ether is the currency, right, or a couple of these other things, it's all down in Bitcoin terms.
Everything is down in Bitcoin terms.
Yeah, it's up in dollar terms, right? Depending on when you bought it, but it's down in Bitcoin terms. I think Ether right now, and I don't mean, and just so anyone who's listening to this who's into crypto, I don't mean this as I'm picking on Ether, right? I actually think there's tons of really smart people who are working on all kinds of innovative things, and some of it will work, some of it won't work, whatever, right? But like I'm just using that because I know the numbers in my head. I think that Ether is down more than 50% priced in Bitcoin terms since December 2017. Right. So they both kind of hit an all-time high. And when they fell, Bitcoin has drastically outperformed. Now, if you bought in 2015, I think, or 14, when the token sale happened, you're up a lot.
Right. And by the way, there's some really smart people that have a bet on Twitter going, right? So we have Raul versus Peter McCormick on Bitcoin and Ether outperformance. And there's some first-class tickets and some rum. And it's fun to follow, right? Two smart people, both have very strong opinions. They just have opposite and opposing.
Well, Peter's not smart, just so we're all clear. And you guys can tell him I said that. He's a good looking guy. He's got good taste in food, but he is not smart.
Okay. Well, nonetheless. So when you talk about education, tell us where we can get more of your intelligence and resources. I personally subscribe to your newsletter. I follow you on Twitter, but tell everybody how they should get more of you.
Yeah, I appreciate it. I think that there's only two things really, right? Go follow me on Twitter. And then if you just go to pompletter.com, I write there every day, and kind of all the other content I put out is all kind of included in there. So I would say those are the two things. But, look, it's not just a me thing, right? I think that there's so many amazing people who are creating so much great content in this space. It's one of the beauties of it is it's almost this open source education, right? There is no CEO for Bitcoin. There is no CEO for many of these other decentralized open protocols. There is no marketing team, right? It is literally volunteers on the internet who have decided that this is something that they want to focus their time, money, and energy on, and they are actively creating content. Sometimes it's because they're an expert in what they're talking about and they're teaching. Other times it's they're documenting their learning process. And so whether it's podcast, YouTube, email, Twitter, Reddit, like all these different platforms, just go learn. Just be intellectually curious. That is the hallmark of the greatest investors. And so if you are intellectually curious, I think you'll end up doing really well in the space.
Cool. So just to give everybody fair warning and remind you, Pomp has a hard stop in 10 minutes, and we're going to honor that. We're really appreciative of your time. So please go ahead and like the video on YouTube and hearts and Facebook. A couple more questions here for you. And then please tell me if there's anything that you want to cover, because, I'm just one person here. But to the extent that people are getting started in Bitcoin, and let's just focus on Bitcoin for the moment, what do you think the best way for them to gain exposure is and store it safely? And do they need to go, cold wallet, hot wallet, exchange?
Yeah. So I always tell people that the first thing that they should do is they should go read the Bitcoin white paper, right? So just go learn. There's a whole bunch of stuff more there, but go read the Bitcoin white paper, go get educated. Let's say that you go and you do that and you say, okay, cool, I want to do this. What should I go do? There's basically three different options that you have. You can go to a major exchange, everything from Coinbase, Kraken, Gemini, etc. And you can just go buy Bitcoin. And you can either leave it on the exchange. If it's a de minimis amount of money to you, $500 or something, and that's not a lot of money to you, that's probably going to be your best bet, right? If you lose it, you're not going to, be super upset about it, but obviously you don't want to lose it. And it's less about somebody's going to hack the exchange or going to hack Bitcoin. It's more likely that you yourself are going to get hacked. Somebody's going to figure out your password or whatever. So if you just have good security protocols in terms of just like you would do on any other website, you're probably going to be okay, right? The second thing that you could do is you could, after you buy Bitcoin, is you could pull it off of the exchange and you could put it in cold storage. And so cold storage is basically all kinds of different things to do there. The most popular being a hardware wallet, right? And so there's a very strong focus on in the ethos of Bitcoin on sovereignty. You have control of the asset, right? You've got the private keys. So you hear a lot of times, not your keys, not your coins, or as my friend Isaiah Jackson says, no keys, no cheese, right? Is kind of his way of saying it. And so I think you can go and you can buy some hardware wallets online. A key piece is if you're going to buy the hardware wallet, make sure you're buying it from the manufacturer. You're not buying it from a reseller on Amazon or anything like that. It'd be all kinds of scams and stuff. So make sure you buy it from the manufacturer. You get it super simple. They come with instructions. You just offload it from the exchange onto your hardware wallet, put it in a safe place. You're all good to go. The third option is that you can earn interest on some of your Bitcoin. And so what I choose to do is I take a portion of the Bitcoin I have and I put it on a platform that I've invested in called BlockFi. And basically what I do is I put it in this interest-bearing account. What they're doing is they're basically lending it out on the back end. They're earning interest and then they're giving me majority of the interest. And I think the interest kind of ranges depending on how much Bitcoin you put there, somewhere between like 3.5% and 6% on your Bitcoin. And so it's a pretty nice way to earn some yield on your asset that is that's just sitting there. And so I think those are kind of the three different things you can do. You can buy it and you can leave it in the kind of a software or hot wallet type situation, whether it's on an exchange or in a dedicated wallet. The second thing that you can do is you can put it into hardware, a wallet or kind of a cold storage situation, or you can put it into one of these accounts that'll earn you yield like with BlockFi. And so I think that's kind of for the beginner, those are like the three easiest things to understand in terms of your options.
And by the way, I do all three, right? So like I have some, yeah, I have some on the exchange where I'm, just continuing to add and I haven't moved it yet. I just moved some portion, maybe 30 or 40% to BlockFi. And I'm earning. And part of the reason I'm doing that is listening to Michael Saylor about borrowing against it as opposed to selling it. I had a really good problem to have. I have very significant gains and I don't really want to pay taxes unnecessarily. Yet at the same time, I have operating businesses and expenses on a daily basis. I like to eat and so does my girlfriend and my kids like to travel. And so like we spend fiat, but I don't want to sell something and pay 30, 40, 50% in taxes unnecessarily. And so that's actually a really good transition. There's all sorts of new things happening on top of Bitcoin, new services, new capabilities. Is there anything that you see that's happening that's really kind of interesting?
I mean, look, one of the things I'm most excited about right now is decentralized applications on top of Bitcoin, right? And so one of the things in the past has been that most of that has been built on Ethereum and in that ecosystem. And there's some other smart contract platforms, Binance Smart Chain, and a couple of these other ones that are all kind of competing for this. But I've recently met a couple of teams that are building on top of Bitcoin, kind of these layer 2 type solutions. Some of them are utilizing things like the Lightning Network, and it's less about kind of decentralized financial applications, and it's more about payment systems and scalability, low cost, instantaneous cash finality, all that kind of stuff. And then others are actually using kind of innovative new technology or just innovative technology in general around like merge mining. And so what they'll do is they'll kind of do some transactions and activities kind of on the layer above Bitcoin, on kind of a layer 2 type solution. And then what they'll do is actually merge that work into the Bitcoin blockchain. And so they kind of anchor on the actual security that Bitcoin provides. And so I think when you kind of look at it, there's all kinds of really fascinating, awesome stuff happening. Some of that's happening in Bitcoin, some of that's happening elsewhere. Things like privacy coins are a great example where there's incredible R&D happening when it comes to privacy-centric technology on the internet and encryption and kind of all this stuff. And so I think that just naturally, as you look at the totality of what's going on here, just the massive amount of intellectual capital that's flooded into the space and the hard work that's going on, it's just really exciting.
And to that end, if you take a look at the smartest people, everybody that's graduating from any top university, any top, program anywhere in the world, they all want to work in crypto. And in fact, you just started a jobs platform, right?
I did. I am shocked at how much interest there is in people who want to get jobs in the space. I knew there was a lot, but I think in the first 4 or 5 weeks, don't hold me to these numbers, but if I remember correctly, I think there was 150,000 views on all of the open roles, and there was 10,000 job applications that went through the platform in a month.
That's insane.
It's nuts. Absolutely nuts.
That's insane. Well, good for you to launch that. So in the final minutes here, tell us a little bit about where you think we are in 2021. We had this big rally up to 58,000. We had all these wonderful announcements from, Saylor and MicroStrategy and Jack and Square, and BlackRock is now looking at it. All these wonderful things. And then we sold off from 58 down to, like, call it 44, 45,000 today. I think we're trading back 48, 49,000. But what do you think about this dip, and where do you think we're going?
Just getting started.
Right? I
think people are drastically underestimating the fireworks that are going to happen in Q3 and Q4. So it'll be fun to watch. But I have publicly stated since 2019 we would hit 100K by the end of 2021. I'm not changing that, but I'm the most conservative guy in the room, and probably for good measure at this point.
Well, listen, I really appreciate your time. We're going to try and end this 2 minutes early. Is there anything that I missed, or anything that you want to tell the audience, new to you, maybe new to Bitcoin, and or even more senior experienced people, because we have a broad array of people that you've attracted?
Yeah, look, I think the key thing is everyone buys Bitcoin at the price they deserve. And ultimately, that deserving element to that statement is determined by the education. And so the only thing that I can ask you to do is go learn. And whether you end up thinking that Bitcoin is great, or you end up thinking it's the dumbest idea in the world, just go learn. And you can do that by reading the Bitcoin white paper. You can consume all the great content in the space, but I think that that intellectual curiosity will end up paying off in spades. So just go learn. If I can ever do anything to help anyone, let me know. You can tweet at me or whatever. I'll do my best to be responsive. And best of luck to everybody. I appreciate you giving me this platform. It's an awesome community you've built. And so best of luck.
Awesome. And one thing that I would just underscore for people paying attention, because, this is kind of a binary thing. People either think it's a scam, or they thought it was a scam, or, a sign of intelligence, by the way, is getting educated and changing your mind. So just because you didn't believe in Bitcoin 6 years ago or 4 years ago, and you missed it at 100, 1,000, 10,000, doesn't mean that you can't get educated today and have a slightly different outlook on a go-forward basis. Intelligence means that you can change your mind. So I completely agree with you, Pomp. I found you very helpful in sort of understanding the right format to think about this, right? Because for me, initially, I thought it was this digital thing, and it was speculation, and it had a lot of sort of NASDAQ 2000, it had a lot of GameStop in it, and I didn't know, I missed it, I don't want to run up. And the more that I learned about sort of how many people and how smart these people and how many jobs and how much money and what the different use cases, and the more you start to stack and realize, like, wow, this is kind of different. And then the hardest Bitcoin is your first one, right? Or your first Satoshi, whatever your, dollar level that you're playing at is. But once you have a little more exposure, turns out that you start to pay more attention, you learn more, you read more, you follow more people, you become more educated. And, chances are you will be like all these institutions and all these retail people, and you'll continue to add. And what I would implore everybody is, to the extent that you do buy, whether it's as a result of this interview or you already long, just hold. The worst thing that you can do is panic sell. I've brought people into Bitcoin on many occasions through education and knowledge, and they've all sold either because they've had great gains or because they've had fear of loss, and then they missed a big run, right? Like, we're just getting started. So if we're at 50,000 and Palm thinks maybe we go to 100,000, and by the way, I concur, and he thinks by 2026 or 2027, we're at $1 million, and I don't think that's unrealistic either. I would hate to ride from 40 to 50,000, take my profit, and then miss 50,000 to 100 or $1 million. So please just hold, size it appropriately, and hold, right? It's real easy. All right, Pomp, listen, it's been a real pleasure. I very much appreciate your time. I'm going to respect the fact that you've got tons more to do. Guys, please like the video. Please give hearts. Please follow Pomp on Twitter @Pomp. And what's the newsletter again?
Pompletter.com.
Pompletter.com. I read it every day. It's fantastic. Pomp, you have a wonderful night. Thank you so much for your time and energy, brother.
Thanks, guys.
All right. Be well. All right, guys. I hope you found this helpful, interesting, educational, informative, eye-opening. I mean, I could go on and on, but look, the best is yet to come. I encourage everybody to do their work. Come join us in the Ready Wealth Management free Facebook group. I think we're up to almost 900 people now, 850, something like that. It's growing quickly. No pump and dump, no bullshit, no name calling. This isn't Reddit, no disrespect to them. They're doing their own thing. But what we are trying to do is have a intelligent, sophisticated investor approach to, monetizing opportunities, avoiding risk, finding asymmetry, adding into our diversified portfolio, and really honoring the following concept, which you've heard me say time and time again: the best is yet to come. Now, that's not just by being lucky, that's by doing your work and being positioned intelligently and listening to people like Pomp and doing your homework, and then having the wherewithal, the fortitude to take action. So if you're really long gold and you start to learn that this is better than gold, like Pomp has suggested, and you want digital gold 2.0, well, you have to have the fortitude and the wherewithal to say, I'm going to change my mind and I'm going to sell some gold or sell some stock. You should certainly consider selling bonds. I'm not sure why people are holding bonds in this day and age right now. Personal opinion, not financial advice, but if you're holding bonds, like I would start there and take a look at sort of alternatives. So the best is yet to come, especially when you're positioned intelligently and you have some asymmetry in a well-rounded, diversified portfolio. So everybody on this channel is interested in real estate primarily, short-term real estate in particular, or Airbnb type real estate investing. And that's a great long-term store of value, great income producing opportunity set, and that's fabulous. But that doesn't mean that you should ignore emerging technology, emerging opportunities, and or diversify away a little bit. And in fact, Pomp talked about the fact that he thinks gold and digital gold, if you will flip, right? Bitcoin will be worth more, which is 10x from here. It will also have an effect on every other asset class to the extent that he and I are correct about where Bitcoin is going. And so let me just give you a personal example. I was in the process of buying some speculative real estate. I was going to buy a tear down, and I was going to do all this work, and I was going to put all this risk capital in there, and I was going to get a construction loan. And over the next 18 months or 2 years, Eric and I were going to design and build this thing. And then we were going to hopefully sell it at a higher price or put it on Airbnb or do whatever. And I stopped and thought about it for a second. And I said, you know what? Real estate's at all-time highs right now. How sure am I that real estate's going to go higher over the next 2 years in this zip code? And I have pretty strong conviction. I still think it's a good buy, right? Don't get me wrong. This isn't like I thought it was a bad buy, so I changed my mind. It's still a very good buy, and I would do that all day long. However, when I stopped and thought about the amount of time, energy, risk, phone calls, headaches, surveys, lawyers, closing, fees, et cetera, et cetera, et cetera, I was like, you know what? The easier thing to do, as Pomp said earlier, is to do nothing. I'm just going to buy Bitcoin and sit on it and let my Bitcoin work for me, as opposed to me busting my hump and taking all this risk and timing the market and getting in and out and decorating and buying furniture and delays and weather and framing. I mean, just, and by the way, I'm doing a major construction project down in the Outer Banks and will be for the next decade. So that's my point. It's not binary. It's not, I'm just real estate or I'm just Bitcoin. But at this late stage, I was kind of looking at it and saying, do I need another real estate product in the portfolio? What does it do for me and my financial health? And yeah, I could make $500,000 or $1 million on a successful exit. But if I take $500,000 or $1 million to make 1x, call it 12 or 18 months out, what if I took that same $500,000 or $1 million and bought Bitcoin? Well, it could be, it's not guaranteed, but it could be worth 1x or 3x or 5x or 10x. And all I have to do, as Pomp said, it was brilliant the way he said it, is like, I have to do nothing. I don't have to do anything. And so over time, there will be more people who take a look at alternatives, whether it be real estate or stocks or starting new jobs, new companies, and say, you know what? The easy play, the more secure play is buying and hodling Bitcoin. So I don't know if we have some time here, sweetheart. Do you have any questions? Is there a way for me, Hardik, maybe you can bring a couple of questions? And I have no idea, by the way, how many people were even tuned in or watching. I'm just looking at Zoom. So if you guys have been thumbs upping, I really appreciate it. Like the YouTube video so more people watch this. For those of you that are on YouTube, we have 95 people on Facebook, 40 on YouTube. Awesome. Fantastic. Hardik, if you have any questions, if people have some questions, I'm going to stay on for, I don't know, maybe 15 minutes or so, and then we'll end it. But I very much appreciate everybody tuning in. I very much encourage you to follow Pomp All positive comments, and thank you. That's fantastic. Thank you, guys. How about a question or two? We're all set up. I got the audio, the video, the streaming, high definition. Does anybody, notice a difference? Okay, comment, hold on, Hardik, I'm gonna try and, this is much better. I'm kind of new to Zoom. For those of you who don't know, Hardik does it all for me behind the scenes. And that's actually why the last time we did it didn't work out quite so well. It was some streaming issue. Governments use gold. Can they adopt coins that can't control yet? Yeah, I mean, if you follow the people that are thinking about where Bitcoin is going, there's a very strong portion of the population that believe that central banks will own digital gold or Bitcoin. Even though they can't control it, they, that old saying, if you can't beat them, join them. And so there's a very strong likelihood that at some point in the future, and there's people that are speculating which government, which central bank owns Bitcoin first. Wonder if Pomp holds anything other than Bitcoin. I think he's got most of his assets in Bitcoin and not other coins. Just like me, I have a very small percentage in Ether. And I think it's got very bright prospects, especially if they sort out some of their Ether 2.0 technology going forward. But, for me, I don't need, like, the difference between a 10x and 11x, it's like the cherry on top, right? Like, I'm just going for, give me the sundae. Give me the sundae. You don't have any cherries, that's okay. I'm still going to be, very happy and healthy. What is my view on Bitcoin forks? I've sold all of the different fork that have occurred over time. Again, I just want to hold what I think has the greatest likelihood of success. I don't need to be a hero. I don't need to outperform. I don't need to have the best shit coin that worked out. Like, it's not about glory or ego for me, or even returns, right? For me, it's really about store of value, not debasing against the US dollar, and having some upside when the network effect, one of the things that we didn't talk about with Pomp is the network effect. If you take a look at what is selling now, it's platforms and networks. So whether it's Facebook, the entire value of Facebook is the network. The fact that there's 1 billion users is what Facebook is worth. There's going to be 1 billion holders of Bitcoin. I don't know when, but there will be. And that network of money is worth far more than the network of social media, right? If you are part owner of the network of money on a go forward basis, and it does anything like 1 billion users like Facebook, and I think it has the possibility of doing far more than that, that is a very valuable network and a very valuable investment. So I don't need to be right about, the shit coin or Ether or this or that. For me, it's I go with the king, as Pomp said, and the sure thing. Okay, so there you go. John, I just answered your question. I didn't even read it. Is there a way to buy Bitcoin using a C Corp? Of course, in Canadian and US. Yeah, you just have to set up a corporate account, and all of the exchanges that he mentioned earlier, whether it's Gemini, and I have relationships with Gemini, I have relationships with Kraken, I have exposure to BlockFi. You just set up a corporate account. Now there's a lot of KYC and AML, know your customer, anti-money laundering. And by the way, it takes weeks, maybe even months. And from my perspective, that's a good thing. One, there's now regulation happening and KYC and AML, so that whole like illicit thing is taken off the table. By the way, I remind everybody, before the advent of Bitcoin, there was illegal activity, drugs, prostitution, whatever that occurred, and they didn't use Bitcoin because it didn't exist. They used fiat currency. So this concept of Bitcoin enabling that is nonsense. In fact, it's the most traceable thing. And if you listen to the FBI, they love the fact that transactions occur on Bitcoin because they can actually trace it back. It's open ledger, it's blockchain, it's there in perpetuity. So in any event, you can just open up a corporate account on Kraken, Gemini, BlockFi, you name it, and you can buy stuff. Let's see. Richard, do you think the next decade stocks might do better than real estate, given that it's so hard to get into real estate? Actually, it's a really interesting question. The challenge with real estate and stocks right now is that everything is elevated. And that's the goal, right? The Federal Reserve and central banks all across the world, that is their goal. They're injecting cash into the economy. And I've said this time and time again on different lives and so on. And what's happening is really unfortunate, right? We're becoming an even more bifurcated world, of even greater bifurcated economy, where we have the haves and the have-nots. And in case you want to know which team you want to play for, you want to play for the haves. The have-nots are in a really bad position, and they are getting worse. The people that are working for W-2 income, salaries, wages, hourly employees, anybody that has a fixed earning potential, no matter what that is, right? You could be a lawyer and you get paid a W-2 salary and you make 6 figures or 7 figures. If you don't have any ups, if you don't have a bonus, if you don't have equity, if you don't have any way to like have a great year, you're screwed. And now you may not think that you're screwed because you make 6 figures, you make 7 figures, but your earning power is relatively less. And therefore, everything gets relatively more expensive. And when you move, like I have, more into Bitcoin, everything's actually getting cheaper. It's less expensive for me to pay my kids' college tuition. It's less and then, by the way, it's not because Bitcoin just keeps going up. It's because the value of the dollar is getting worse and worse, right? So I pay fiat for education. I pay fiat for vacation. I pay fiat for food and stuff. And so if I hold digital currency that just has to retain, all it has to do, it doesn't have to go up. It just doesn't have to lose 5% a year, 15% over 3, 95% over whatever it is, call it 15 years. So things get cheaper. So I'm not sure how I started on that, but I think that the point is the haves have assets, and those assets include real estate, and real estate is going up. It's going up really severely in many places if you've picked the right places. And the way that you have picked the right places, again, goes back to all of my different teachings, and it comes to scarcity, right? So I'm sitting here in Jackson Hole, Wyoming with Erica. Hi, sweetheart, by the way, you look good. We're sitting here in Jackson Hole, Wyoming, and many of you have heard me say this. It's 98% of this land is protected forever. It's national forest. It'll never be developed. So then you have 2% of the land that is available for housing stock, and the vast majority of that is developed. And then you get even more and more granular. Of that 2%, I think it's like 5% is short-term rentable that has, the ability to go on Airbnb. And so like, that's where I am. I'm at the epicenter of the most scarce real estate in the world. I also own real estate in another very scarce property in Palm Beach Island, right? And you see, just look at any newspaper, go to your Google feed. Palm Beach is absolutely on fire. It's some of the most expensive real estate. It's just going through the roof. And I've received unsolicited offers on multiple properties. Like, they're not even for sale. And I bought some properties in August of this past year. Actually, today, friends, check this out. Today is my 1-year anniversary selling my largest real estate property I've ever owned, which was a beautiful landmark brownstone. It was my family home. And through the divorce, we actually ended up turning it into a long-term rental. And we had tenants in there, monetized it. And then after a period of time, so that it was no longer my personal residence and it became a commercial property, we then sold it, and then we 1031'd it. We deferred all the gains. And then rolled it into short-term rental properties in West Palm Beach, Palm Springs. And so like those things are absolutely doing incredibly well. I've received unsolicited bids for those properties, but today is the 1-year anniversary of the closing. And I have to tell you, I was sweating bullets on that closing because it was in New York City, the epicenter of COVID. And 1 year ago, if you just rewind the clock, man, was that a scary time. COVID was just rolling out. We had no idea. We thought it was the absolute end of the world, and not minimizing. It's really scary. It's really bad, but it's much more comfortable today than it was back then when we had no idea, right? We were in total lockdown. And so I was very worried and nervous that I would not be able to sell that property. In fact, I thought that the person buying it, who was in finance and, has a different outlook and different need than I did, I was very worried that they would walk away, lose the 10% of the security deposit in the contract, and that's all I would have is 10%. Now that asset is probably worth 30% or 40% less because urban, high tax, low quality of life just isn't really what's thriving in real estate, and real estate is location dependent. So when you ask me about stocks and you ask me about real estate, the right real estate will continue to appreciate. The way that I kind of think about it, just like Bitcoin, is find the best real estate, the best location, the most scarce, where most people want to go, and that will do really well. The challenge with stocks is that they trade on a price earnings multiple. And so the question is, how do those earnings do? The price earnings multiple will not expand indefinitely, right? Like there is an upper bound, like Pomp said. Now, if the earnings increase and you continue to go forward, and Warren Buffett is fond of saying, don't bet against America, that should be fine too. But for me personally, one of the things that you see some really intelligent people doing, and I've been saying this on the YouTube channel and in Facebook and at the live events. By the way, a plug for the live event. For those of you that want to learn more and be with me and Erica and 40 other entrepreneurs, we're going to be hosting STRU Live May 1st through the 4th, living in the house that Airbnb built at Edge Camp Sporting Club. And then we're doing a second session. I think we're about like 60 or 70% sold out, which means we have 10 or 15 tickets for each session. Hardik, maybe you can put a link in there so people can figure out how to buy it. But if you like what you're hearing and you want to learn more and proximity's power and you want to live and breathe in Edge Camp Sporting Club, the project that I have in the Outer Banks, we're hosting a live event. Each one is capped at 40 people. We are providing COVID
We have
tests.
less than 10 left.
Oh, we have less than 10 left. Okay, fantastic. Maybe we'll have less than 5 left when this thing is done. But in any event, it's a really great opportunity to learn and be with people that are like-minded, that are looking to advance and educate themselves, like Pomp said. It's all about education, and your outlook is going to be directly affected by the people that you spend the most time with and the people that you're learning from and the people that you're growing with and co-investing and so on. And great friendships have been made at the other live events that we've had, both in Nashville about a year and a half ago. And by the way, we have that on video, and we talk about the properties that I was predicting would do well. And those properties, by the way, have gone absolutely gangbusters. We were talking about Gatlinburg, Tennessee, and Pigeon Forge. We were talking about Joshua Tree, all of the things that I was teaching back then. We've had a couple people buy a course, which is really just the video of that live event. And when they're watching it, they're texting me. They're like, I can't believe you predicted this. And I can't believe you predicted this. And you talked about diversification and the importance of diversification. Don't put all your eggs in one basket. So in any event, for those of you that are interested in learning more and you want to get up close and personal, not only with myself and Erica, but 40 other entrepreneurs, we're providing COVID tests. Masks are optional. We want you to feel safe and comfortable. So everybody will be tested and negative. And by then, probably some people will even have vaccines. So we're really excited to host that. And I think the really cool thing is to take a look at the Edge Camp Sporting Village, which is the entire property. We've got 50 acres that we're going to be developing over the next decade. And when you talk about scarcity, it doesn't get more scarce than an island. So we bought the last 50 acres. We're going to be developing that over time. And unlike most developers that actually buy stuff and then go ahead and de-risk and flip it, we're so confident and feel like the future is so bright in the short-term rental space, especially in the Outer Banks and in vacation rentals, that we are not selling it. We are actually hodling. So we're going to run and operate this much like a multifamily building. We're going to have 50, 60, 70 homes over the next decade that we are investing in the area. So when we talk about buying the right location, I love islands, I love valleys, I love places that have restrictions and only certain zones have short-term rental capabilities, because as more people want to get into the space, supply and demand, Econ 101, prices go up. All right, what else do we have here? Is it complicated to get my interest on Bitcoin? No, if you are joining now on BlockFi, and there's another one that I've actually put a little bit of Bitcoin on, it's Celsius. You just open an account, you transfer some blockchain, some Bitcoin over there, and you will start earning interest. You can also do it on Ether and some of these other coins, although I don't really do that. I just have some on blockchain, Bitcoin. I do want to mention this though, like in anything, there's no reward without risk. So I don't understand myself personally fully today what the additional risk is with these individuals lending out our Bitcoin. That's how you get paid interest. They take the Bitcoin that you deposit there, they loan it to institutional trading desks and hedge funds and so on. And I understand all about counterparty risk. I get all that. But there's additional risk that I don't know. So I just want to mention, it's not a free lunch. I don't think it's very risky. I'm doing it myself. I don't have all my assets in those interest-bearing accounts. I do have a cold wallet, so like on a rainy day, I can live comfortably for the rest of my life. But I do earn interest where applicable, and I also take loans against some of this Bitcoin as well. Let's see. Looking forward to your podcasting with you, Richard Austin, my man. Yeah, I'm looking forward to that. What is the date on that? I don't have it memorized. Let's see. Do you think we'll go into a negative interest rate? Yes, I think interest rates are near or at zero and or negative for the foreseeable future. And I think that the Federal Reserve and central banks across the world are in a very hard place and will have great difficulty raising interest rates. In fact, you just saw the specter of rising interest rates last week, where the stock market and global stock markets sold off hard, and all assets, including Bitcoin, sold off hard. And that was at the looming threat of a rising interest rate environment. Now, we have to rise a lot more than that for it to actually be a material effect. We're so close to zero. And even though it's a large percentage change, it doesn't really affect us. You know, the reason that these things matter more than anything is the world doesn't like uncertainty. And so what I mean by that is if we knew we were in a rising interest rate environment, we'd be fine. But if we don't know how much we're rising or when we're rising or how quickly we're rising, we don't know the slope, that's really uncomfortable. So let's see. What is the primary, Bobby, my man Bobby, would love to hear your opinion of what is primarily driving the current price action in Bitcoin. Why do crypto assets across the board seem to move in lockstep with one another? So what I would say is the following. The reason that crypto is moving is that there's more money coming into it. I don't mean to minimize it, but that's literally what's happening. And that's the way that you want to buy all assets. So let's just use real estate, the Outer Banks. I bought up to 50 acres of real estate before it was a hot commodity. I couldn't go buy it today. It would be too expensive. There'd be too much competition. I couldn't get the appraisals. So you want to, in life, invest your money in assets when you see intrinsic value that others don't. You want to be ahead of the curve. You want to see the future. You want to take some risk capital and you want to make these forward-looking bets. And that's basically what's happening in Bitcoin and many of these coins right now, is that retail investors like Pomp and myself and maybe you and others saw some opportunity here that the institutions, for a variety of reasons, you know, like there's funds, whether they're hedge funds or there's corporate treasuries or there's board of directors, like they're prohibited from buying these things. So they can't. So what are they doing now? Now they're going back and they're having a board meeting and they're saying, well, maybe we should change our stance. And then they don't vote on it this meeting and they vote on it 3 months forward. And they're like, yeah, it keeps going up. Maybe we should do something. And then they wait another 3 months. And eventually they say, yeah, let's change the bylaws. Let's change our legal documents. Let's open up a new fund that allows it. You see it in the news, right? BlackRock said that they've just filed a new form to allow them to trade in certain accounts. And JP Morgan is saying that they're encouraging some of their clients to invest up to 1%. So like, people are changing their minds and they're slowly coming to it. And what that means is there's more money coming into the space. And with a fixed asset like Bitcoin, where there's a maximum of 21 million Bitcoin, when there's more demand and a fixed supply, then prices go up. And what's interesting about Bitcoin in particular, for those of you who don't really know, there's this concept of halvening. So what's happening right now across the world, literally every central bank is printing money. They're injecting more fiat to encourage people to spend more, to encouraging people to buy more stocks, buy more real estate, for the haves to have even more. And that's what's happening. And that's why you're seeing this, you know, people are saying there's no inflation. That's nonsense. If you take a look at the core inflation as measured by, you know, the Federal Reserve, and they say, okay, a basket of eggs and milk and so on. Yeah, okay, maybe that's gone up 1 or 2%. But if you want to buy a car, or you want to pay for a college education, or you want to buy a house, or you want to go on vacation, you want to stay in my Airbnb, my rates are going up. Your Airbnb, I've been teaching you to raise your rates. That's called inflation. It's just not in the measured basket of goods. So therefore, we're underreporting inflation and saying it's not an issue. But basically, there's just more money coming into the space, and it's going to continue to come in, and there's a fixed number of assets. And in Bitcoin, as opposed to things being inflated by printing more money, there's this concept of halvening, which is, you know, the way Satoshi created this mathematical model. Every 4 years, the number of mining rewards gets halved. So right now, you know, I guess 6 months ago, there was 1,800 Bitcoins that were being rewarded every single day for all the people that were mining and the hash algorithms and so on. And then there was this halving. And so now it's 900 Bitcoins per day. And then in 4 years, it's going to be 450 and then 225 and so on. So there's this self-regulating, mathematically engineered brilliance that actually reduces the supply on a go-forward basis until we get to the 21 million, which I think is about 100 years from now or something. So in any event, that's what's driving the price appreciation of Bitcoin. It's not speculative. It's just that there's more people allocating 1 or 3%, or institutions saying, I'm going to take 5% of my portfolio. And so as everybody starts to do that, there's only one way it can go, is up. Now, it's not without risk, and don't, invest money that you can't afford to lose, and start small, and so on and so forth. Not financial advice. I'm just trying to help you guys. I'm not trying to lead you astray or to have you take risks that you're not comfortable taking. So what else? What's up with lumber prices? Same thing, dude. This is my man Kurt. Lumber prices, everything that's an asset or goes into an asset, all the raw materials that are going into these assets and into real estate is being bid through the roof because there's more demand. Everybody wants a brand new house. So there's more demand for brand new houses. And so builders and developers and people like me are buying as much lumber as we possibly can to build as many houses as we possibly can to satisfy this never-ending need. And so consequently, once again, there's a certain number of 2x4s and 4x4s and pilings that can be produced, right? Like there's forests, and then there's the places where they mill it. They can't produce an infinite amount. There's a backlog. And so when you have a supply constraint and more demand, boom, prices go up. What, sweetheart? Boom. Oh, boom. Okay. Anything else? Francis, can a self-directed IRA buy Bitcoin? Francis, how are you, sweetheart? Yes, they can. Absolutely. You can open up a self-directed IRA. There's all sorts of rules. You have to be careful, but I can make an introduction. I recommend the person that I've worked with, and a lot of this short-term rental people have worked with, which is my man, Adam Bregman or Bergman. I don't know. It's been a long day, but IRAfinancial.com, and tell Adam I said hello. What else? Trey, should you move your REIT into Bitcoin? Trey, how you doing? You remember Trey, sweetheart? We met him in California. Trey, nice to hear you or see you, or I don't know what we're doing, chat with you. I can't answer that question only because I don't know what else you have and whether you have exposure to Bitcoin, but you obviously have a lot of real estate. You're doing quite well in the short-term rental market. So the REIT is just a way for you to scale without doing any more work. It's passive. It throws off dividends. So that's a nice income stream. If you're living off those dividends, Bitcoin doesn't pay dividends. So that's why I say I can't tell you what to do. I'd need to know a little bit more about your situation. But to the extent that you already own real estate, income producing real estate in the short-term rental space, and to the extent that you don't have any exposure to Bitcoin, then yes, I would consider doing that. I mentioned earlier in I don't know what this is. I was going to say podcast live. Well, it's Facebook Live, it's YouTube Live, Ready Wealth Management. To the extent that you don't have any exposure in crypto, then I would do that. But I would consider maybe bonds, your fixed income portfolio first. I think that they have the possibility of losing principal, right? As interest rates go up, there's that inverse relationship. So not only are you not getting paid a lot of yield, you can get just as much yield, by the way, at BlockFi, between 3 and 6%, Pomp said, if you put your Bitcoin over at BlockFi as you're getting in your fixed income portfolio. But here's a beautiful thing. As interest rates increase, I think Bitcoin will continue to increase. And as interest rates increase, your fixed income portfolio is likely going to lose principal. So you want to contemplate that. All right. Any other questions here, or how are we doing on time?
We're good.
We're good. Okay.
Yeah.
How many people are on? I can't tell anything. So I don't know, Hardik, do you have any indication? Am I just sitting? I don't see any more questions coming up. So I don't know if we're, boring people. People are asleep, or hopefully they're liking the video, subscribing to the channel if you haven't been on here. Okay, cool. We've still got, about 100 people on, which is pretty cool. Any more questions? Otherwise, I think we're going to end it. I really want to thank Pomp. I really want to encourage you to follow him on Twitter @Pomp, and then subscribe to his investor letter, which I think he said was pompinvestor.com. He sends out an email every single day. Thank you. I hear you. Move my bonds out of my portfolio and put them into crypto. I'll give them big thought. Thank you. All right, Trey, cool. Anybody else? Any other questions? Otherwise, I think we're going to wrap it up. I hope you found this interesting and helpful. I would encourage you, please, to invite people to the Ready Wealth Management group on Facebook, which is an adult conversation about risks and opportunities and portfolio management and diversification. And, I think it's, I know it's a great place for people to learn and share, again, with a lot of positivity, not pump and dump. And we're not looking at, really speculative stuff. We're we're trying to do the work, right? We're trying to be educated and informed. And so it's a great place. So to the extent that you have any friends, family, relatives, loved ones that would benefit from it, please encourage them and invite them into our free Facebook group, Ready Wealth Management. And for those of you that want more of this and in person, come check us out at STRU Live in the Outer Banks. May 1st through the 4th is one session. Erica says we have less than 10 seats. And then also May 5th through the 8th is the second session. And we're going to be living in the Outer Banks. We're going to be taking a look at the home that I built, how we discuss opportunity, how we create experiences, how we find the right tribe, how we monetize these things, how we find them earlier. We're going to take a look at the construction projects that we have going on. And I know there's a lot of people that are actually coming that are looking to grow their short-term rental business beyond just individual homes, right? Like, okay, I've got 2, 3, 5 of them. What's next? How do I do it? So if that appeals to you, please come join us. Hardik, I think, hopefully put a link somewhere so you can buy it. If not, you can just email Hardik at str.university, and he'll get you the link. But we're going to be there. It's going to be fabulous. Erica puts on incredible events and hospitality and food and music, and it's going to be fun. It's going to get you into peak energy. And there's not a better way to learn than to learn with like-minded people and when you're having fun, right? Like, then it's effortless, and then it gets really ingrained in your body, and you love it and you live it and you breathe it, and it becomes you. Nicholas, going away inspired as always after a session with you. I love it. All right, guys. Adam Wyndham, great video. Our host, Financial, our sponsor, our gold sponsor at STRU Live, Adam Wyndham from Host Financial. He's coming down with his entire team. So for those of you that are looking to do deals and need financing and have some ideas, get your personal financial statement together, get all of your documentation together. He's coming down, he told me, I think with 3 or 4 other team members. He's going to be there for the entire week, and he's going to be available before and after and during, and really he's there to facilitate, and I must thank him. He's financed the entire Edge Camp Sporting Club construction. We're going through a refi. In fact, as soon as I'm off this, I'm calling you, Adam, you better have great news for me. He's found me a deal, like the best deal I've ever even imagined. I'm super excited. So in any event, Adam.
And Grandview.
Oh yeah, and all my properties. I mean, I just literally, and Adam, I'm going to give you the shout out, but you can't do this. He's like my in-house financial arm, right? He knows everything about all of my deals. I trust him implicitly, and he gets it done. So really happy that they're sponsors, and really psyched to hang out with you for that week, and I encourage others that want to grow and learn and understand how short-term rentals can be financed to hang out with Adam and his entire team that he's bringing. All right, guys, listen, I really appreciate all of your time, your energy, your open-mindedness, your desire and ability to grow and learn, and just get outside that comfort zone, because the future is incredibly bright. The best is in fact yet to come, but you have to be positioned intelligently. So thank you, everybody. Thank you, Erica. Thank you, Hardik. Thank you, Short Term Rental University on YouTube. Thank you, Short Term Rental University on Facebook. Those that joined the Ready Wealth Management group, bring your friends, your family, your loved ones, because if you love them, they got to be positioned intelligently. So let's get them ready. All right, friends, have a great night. I hope you enjoyed this. Please like the video, subscribe to the channel, and we'll see you soon. I don't know how to end this, but that's a different story. All right, guys, have a great night. Be well. Bye-bye.